Glad to know you're still with us. And like I told you, we're doing a comparative analysis of consumer goods second quarter report. Well, we'll start with the turnover. So for the turnover, we have Unilever Nigeria, we have NASCON, we have NNFM, we have Cadbury Nigeria, Nestle Nigeria, Bra Foods, Dangote Sugar, Flour Mills Nigeria, Honeywell Flour, and Vitafoam. So these are the companies that make the consumer goods that we'll be considering today. We'll have the picture displayed right here on the screen now. So we'll look at 2022, 2021, and the percentage change. These are the things we're working with right now. So for Unilever Nigeria, in 2022, what they earned was 43.81 billion naira. That's in 2022, and of course in 2021 for Unilever Nigeria it was 32.42 billion naira, and the percentage change is 35.12. That's for turnover. So for turnover for NASCON in 2022, 25.13 billion naira. In 2021, 17.57 billion naira. And the percentage change for the turnover for these consumer goods is 43.01. And still on turnover, NNFM, we have 4.39 billion naira in 2022. In 2021, NNFM gave us 3.56 billion naira. And the percentage change there is 23.22. For Cadbury Nigeria in 2022, 27.88 billion naira. In 2021, 18.52 billion naira. And the percentage change is 50.50. That's for their earnings. And of course, Nestle Nigeria earnings, 222.45 billion naira. That was in 2022 second quarter. In 2021, 171.44 billion naira. All right. And then for the percentage change for Nestle Nigeria, 29.75. For Bra Foods, 168.85 billion naira in 2022, and in 2021, 151.73 billion naira, the percentage change being 11.29. For Dangote Sugar, 185.46 billion naira in 2022, and in 2021, 131.95 billion naira, the percentage change being 40.55%. For Flour Mills Nigeria, 339.60 billion naira, 339.60 billion naira, and in 2021, 233.70 billion naira, percentage change 45.31. And for Honeywell Flour, 40.67 billion naira in 2022, then second quarter 2021, 33.06 billion naira. And for the percentage change, it's 23.03. For Vitafoam, 35.66 billion naira in 2022, and in 2021, 26.83 billion naira, and the percentage change being 32.88. That's what we have for the turnover. I think I'd like us to start with Mr. Garba. Mr. Garba, let's have your take on the turnover of these companies.
Well, it shows you that during inflation, it also reflects in their turnover, because majority of them, they have increase in the turnover ahead of the inflation.
Okay. All right. I think, Mr. Charles, you have to take it up from there.
Yes, thank you very much. We've seen the turnover figures, and for me, it's expected, but again, yes, inflation has come in, and of course, you expect price of the sale of their goods to go up, But again, at the same time, you look at where they are coming from. 2021, we had the COVID-19 was still on, and for them increasing their turnover, one, it goes to show that, yes, the management is trying to manage their costs very well, and we are seeing this increase. But at the same time, investors are more interested for sustainability, because you can have this increased turnover. We are seeing for Unilever, we are seeing over 35%. Those are the top line. The bottom line, we expect it to be more, because that is what investors are always looking at. Yes, because your turnover could be high, but what of your cost of finance, cost of sales, distribution? They tell you diesel.
We'll definitely get there.
So But I think I must also give them kudos for some of these increase in figures. Yeah.
All right. Let's have your take on that.
Yeah, for me, I would say that most of the companies in Nigeria post COVID-19 aggressiveness or kind of a commitment to reach their market is paying off for them. Yeah. And you can see that their turnover is up. It tells that one, either they are increasing their production, or don't forget that because of inflation, there already a markup in price that also reflects on what on the top line. But I believe that they are now doing more aggressive sales because of what during COVID-19, a lot of restriction, and even people are not even going to the office for production. Most of them are working from home. I believe this is a new trend, but like you just said, seeing the top line is very, very important analysis. When the companies sustain the top line, means that they are eating to a new market or they are adding to what more product that is expanding their sales. But what is very important to every one of us that are investors or analysts, that at the end of the day, having a top line that is robust is very good. We want to see your bottom line, which will see that the cost of finance is not mentioned, and every other cost associated with production, cost of sale and others has gone up. That's why their bottom line is a bit small compared to the top line. But the good thing is that consistent and also sustainability is very, very important at the end of the day. But I believe that for the consumer sector, they what we call consumer discretionary and consumer staples, but there are some goods that consumers will naturally kind of reduce their consumption or put aside now that inflation is high and the purchasing power is also low. But there are some goods, whether there is inflation, whether there is kind of economic downturn, people will have to eat those products. For that, investors are looking at those companies that their product or their services is what is inelastic demand. Whether they increase price, there will still be demand for that. But I think that's what we're looking at. That's why I said the consumer discretionary income and consumer staple food. These are the things we want to look at. Where they will put in the money, because if you are before you want to buy new cars now, you think you will buy a new car, but you want to buy what food and other things that will take off you. These are what we're looking at. Which company among these the privileged companies or consumer goods that their product is what we need on a daily basis. Their sales will be what will remain up. What matters is that the cost of running business is what is going to at the end of the day affect you and I as investors, because if they are paying us what is not related to the price or not for that, demand for their shares will be a bit down.
Yeah, just to even add to what he has said, as a young investment analyst when we started then, Unilever was one of our best, Then you can compare Unilever with Nestle. But look at what is happening today. But again, I normally say, I can even ask Ambrose here now. I say, when he wakes up, the first thing he does, maybe he will pray. The next thing he will do, you're thinking of
your personal.
Yeah, he will thinking of, to brush his teeth.
Yes.
He's using what? Close up. After that, he wants to
using
take
toothpaste.
Toothpaste. Yes. Okay, sorry, toothpaste. Again, he wants to maybe take tea. He knows what he will take. Maybe Lipton. Sorry for that advert. Then after that, maybe he wants to. After having his baits, he wants to use certain ointments. All these are being produced by Unilever. So Unilever is producing essential things that people require. Like he said, whether the demand is inelastic or whatever, they will still demand this product. So because of inflation, disposable income is very low. You will want to, consumer finance, you will want to, do your budget to make sure that the essential things, you get them. So Unilever stands a better chance to continue to improve on what they have done today.
But I think it's important we go to profit after tax now, because that's what will help us understand.
Exactly.
And we'll come to him with this profit after tax now. We are reviewing 10 companies. We'll start with Unilever as always, and then 2022, 2021, then percentage change. So for Unilever Nigeria, profit after tax 1.91 billion naira in 2022, and in 2021 714.78 billion naira. Million, right? Yeah. Okay, 714.78 million naira in 2021. So the percentage change there is 166.75. For Dascon, 1.54 billion naira in 2022, and in 2021, 1.45 billion naira. That's 5.85% change. For NNFM, 168.57 million naira in 2022. And in 2021, 82.86 million naira, being a percentage change of 103.45. Cadbury Nigeria, 2.34 billion naira in 2022. And in 2021, minus 516.17 million naira. The percentage change there being 553.69. Nestle Nigeria, 27.75 billion naira, 2021, 21.73 billion naira. The change, 27.70. Boa Foods, 39.31 billion naira. 2021, 34.56 billion naira, percent change, 13.74. Dangote Sugar, 20.24 billion naira in 2022. In 2021, 12.61 billion naira, and the percentage change, 60.58. Flour Mills Nigeria, 5.81 billion naira. 2021, 5.45 billion naira, percentage change, 6.69. And for Honeywell Flour, we have minus 2.40 billion naira in 2022. And in 2021, 150 million naira. What we have there is minus 1,697.33% change. Vitafoam finally now 4.54 billion naira in 2022, and in 2021 3.41 billion naira. And then the percentage change is 33.23. Profit after tax. Mr. Galba, let's have your thought on this company. Well, on these companies.
And where we should look at as an investor.
Well, I guess the connection is really not favorable right now. So let's start with you, Mr. Charles.
Yes, the figures, they are quite encouraging. Yes, we are seeing, except that of, which company is that?
Honeywell.
Honeywell, of course, you understand the issues with Honeywell and Flour Mills. Flour Mills are virtually taking over Honeywell, but again, they are telling us that acquisition is going to be strategic. It's going to improve food production, because these are similar companies in the same industry. So instead of competing now, they're going to annex the two companies together. We'll see improvement in food production. Yes, for Dangote Sugar, I'll give them kudos. And you see that sugar issue is a problem. We're not even meeting the local demand for sugar. So, and Dangote Sugar Refinery has come to close that gap. And you can see that their profits was increased. There was a lot of product strategy. They promoted most of their products. The 1,000 gram, 500 gram, they promoted it so well in the market. And of course, they also did backward integration, because that is what we're always telling most companies, and they are not importing sugarcane. Sugarcane is grown here in Nigeria. So they want to increase that production of sugarcane, because that serves as raw material for their production. So a very good backward integration, you see the multiplier effect. A lot of farmers will be empowered because of that backward integration, because they will encourage the farmers, give them what they need to cultivate and produce to meet what they want to use in their production. So that integration master plan really made it for them to discover and to give us this kind of figures. But however, I must also commend them again, because despite the macroeconomic headwinds that were going on, to get FX was a problem. Inflation too is there, rising cost is there, but at the end of the day,
Well, some persons will say that Dangote enjoys some advantage.
Well, even if you enjoy some advantage, the issue is that's why it's macroeconomic issue. It will still affect him. Cost of production, does it get an advantage in terms of diesel? It doesn't. Okay, so for Nestle too, I would say yes, they've tried so much, but their cost of sale too has also gone up. Finance cost has also gone up. Well, paying about a dividend of over 50 naira, I think that's encouraging. But looking at the price of Nestle too, I will not encourage small investors to go in there. But for what we call to defend your portfolio, yes, defensive stock, I would recommend Nestle for people to look at that. But again, you will know that whether we like it or not, the government is doing all they can. It's just that we are not getting it. You can see the macroeconomic conditions, and some of these companies are still posting this kind of profitability. So we must give kudos to the board and I know it's not easy, So I'll leave it there for Ambrose to continue.
No, like what you just said, it doesn't mean that we should sack every governor and all the senators away from that seat, because we need corporate Nigeria to come and manage Nigeria for us. If they are doing well in this space, their companies, they are doing well.
You say that with your chest.
Yes. We need to take all these corporate MDs, managers to go and manage Nigeria for us, because they do well. Because if they can use the little resources they have to be producing this for shareholders, it tells you that we need a corporate guys to go and manage Nigeria for us as president, as Senate, all of that, so that at the end of the day they make informed decision that will do Nigeria to next we are today. Let's that one part. Let's look at the figure that are just in the market, as you just said. Yes. For me, the bottom line is what I look at as analysts most. Top line is good because we have a criteria and invest data that you must meet this criteria to say your company performance is outstanding, and which most of this company performance, I'll tell you, beat expectation. One, because there's no liquidity in the market is not reacting to these numbers, that is one. But two, like he just said, most of these companies that their product, they successfully increase their price, or even locally or internationally, their demand for their product, you can see the numbers. Like he mentioned, Dangote sugar. In Brazil, there was kind of a drought in Brazil. Sugar production was not so much there. For me, it was a company like Dangote sugar exporting sugar again. And not only that, the demand for sugar is high because of what it is for industrial, not for consumer. Because we say that sugar is bad for us as human beings, but for industrial use, the demand is there. And for that, the price is high. And you can see from 12 billion to almost 20 billion profit after tax at the end of the second half. For me, you can project that at the end of the year, you can see that company producing about almost 40 billion profit after tax, which is good, and that will support their price if liquidity comes back to the market. But for me, I've said earlier that because of the staple food and for consumers, these companies are successfully pass their cost towards to consumer, and if they sustain this, that will be good for them at the end of the year. But don't forget that if you look at in between the top line and the bottom line, cost of operation, the high cost of finance have eaten deep into them. But that is why, as an investor, because you are seeing this, it's good that you look at what is the cash flow of this company to know if there is sustainability at the end of the day. Because if cost is rising, earnings is looking up, and so your cash flow is declining. It's a red flag for most investors. That as you are seeing these earnings, you are seeing high cost of finance, high cost of operation, high cost of sales. After you see their earnings, which is a profit after tax positive, please, I will encourage you, go back and see their cash flow to see their operating cash flow is it maintaining an uptrend. Because if that's not an uptrend, that means this number we're seeing won't last. But the good thing is that for the past 3 years, we have seen most of the Nigerian companies sustaining an uptrend in performance. That also supported the market to this level. Which for investors, their presence is not much threatened because we are seeing local non-institutional investors and the high networking player playing the market because they are seeing these good numbers supporting the price and their payout. And also payout for many companies in Nigeria has been have improved. For me, it's a good one for the market. But for investors, look at these companies that we just mentioned in this sector. I would advise look at their profit margin, look at what their top line and bottom line. At the same time, look at what their book value to see the current price. Are they on their value? Is there upside potential going to the future of this company? If there is, now another thing that is very important, look at their what we call 52 days high and low, and see what the price is now. That will give you a clue where you should be in this company. All right,
I think that's a very good place to end it. But we won't do that without first quickly looking at the book value per share. So very quickly, we have Unilever Nigeria, 11 naira 28 kobo, and then we also have NASCON, 5 naira 70 kobo.
Now this will be their earning per share, not book value. This will be earning per share, I'm saying.
This book value per share.
So what is in? Okay, go ahead.
This book value per share. So for book value per share, Unilever Nigeria, 11 naira 28 kobo, NASCON, 5 naira 70 kobo, NNFM, 18 naira 16 kobo, Cadbury Nigeria, 8 naira 1 kobo, Nestle Nigeria, 36 naira 40 kobo, Boa Foods, 13 naira 33 kobo, Dangote Sugar, 11 naira 26 kobo, Flour Mills Nigeria, 49 naira 23 kobo, Honeywell Flour, 2 naira 59 kobo, and Vitafoam, 12 naira 38 kobo. In less than 30 seconds, what's your take on this?
Yeah.
In less than 30 seconds.
Yeah, this figure for me should guide investor what to do. Because looking at the market value and look at the book value, look at is there any difference between the price, whatever that is undervalued or overpriced.
So if it's undervalued, what should be the next action?
No, that means it's interesting, but you also know your investment objective. If you what you want to buy will guide the kind of stock that should be in your portfolio. For me, there are some stock that will be in my portfolio because I'm a trader and also a long-term investor. But for trading my portfolio, some of this stuff should not be in your portfolio. For long-term investors, some should be there. Like I said, if you look at the 52 high of this company, 52 low, to see where they are, to see where it's margin for what, for capital appreciation or upside potential of this to go up, it's also guide you. But on the strength of the book value, it's very to the book value most times is when the company is going for liquidation, and most of them are just to guide you to match the book value with what the market value to know exactly where the company is. Well, that's the simplest way to evaluate, kind of do evaluation for a company. That's why also P ratio is very, very key.
All right.
P ratio tells you how long you're going to wait.
We have to stop it right now. Thank you so much. We don't even have 1 second. Well, many thanks for joining us on the show today, and thanks to all our analysts. Thanks for coming. Thank you too for coming. My name is Perpetua Fasamipit. I'll see you again next week. Bye for now.